We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisade's Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Jan Nieuwenhuijs, gold market analyst at Money Metals. Jan, thanks for joining me today. How are you?
I'm good. Thanks for the invite.
It's excellent to have you back. It's actually been quite a while since you and I have spoken. I think back when I was doing audio only. So it's great to have you back on the show.
Yeah. I can remember we were. There was a couple of years back when we did something about the Comex, an interview. Yeah.
Well, exactly on that point. I'd like to start by talking about getting your take on the movement of gold out of London from the LBMA to the Comex. What do you think prompted that flow, and where are we at, in that cycle now?
Well, I think what prompted it is fear of tariffs. You can't, unsee that the moment Trump won the elections, and then this started. And then we saw a premium rising on the Comex relative to the London price, London spot. So I think it's very much related to the tariffs, but also to a new world order. So on one hand, there may be some dealers in the US that want to get their hands on gold before any tariffs are set at the border. But there also may be some reshuffling of the global gold market in which billion banks might want some more gold inside the US instead of outside, and therefore also ship it to New York. And so that can bring a lot of gold into the US. Now, the former group might want to buy that gold, right? So they buy on Comex, and that, of course, then creates a higher futures price and a premium relative to London. And then billion banks as well. Those are the biggest arbitragers in this game. Let's say JP Morgan does it all. They can easily buy London and short futures to make delivery on those Comex contracts. Of course, they have to go through Switzerland to refine the bars in 100-ounce bars, but I think they prefer 3 kilo bars. So I think a lot of it goes into the US into kilo bars, because once you have kilo bars in the US, you can either deliver them on the Comex, but you can also take them back to Asia and sell them there. So maybe kilo bars are most convenient for the billion banks. Now, of course, through this arbitrage game, the billions bank, they buy in London, they sell in New York. They make delivery to lock in their arbitrage profit. So there's a lot of billion banks making delivery, and you saw the delivery numbers going up. Like, I think it has broken records. But there's also a lot of long contracts that are taking delivery. I mean, you can have a short and wait until the end of the month and make delivery. But there's also a long, that needs to take the other side and take delivery, or else the long would have sold his long contract by going short, and then the price would have come down. But that's not what's happening. The price keeps going up, let's say, and a lot of people take delivery in New York. So that's actual demand, and that's also increasing the price. To be honest, I don't really know where this is going, because Trump is giving a lot of mixed signals about tariffs. So one day he says tariffs on Mexico and Canada, and the next day he says, well, yeah, it's just the art of the deal, and I'm not going to do that. And then a week later he does. So I'm I'm not sure how this is going, but maybe that insecurity is what driving a lot of people into, well, let's just move some metal inside the US. I don't know. I'm also sorry. I just moved into this house and I was very busy doing some renovations and stuff. So this is a subject I haven't carefully researched. So I'm not sure what the end of this is. Maybe a different gold market in terms that there's also, yeah, let's say. A more liquid spot market in New York, which is taking some market share from London. But we'll see.
Well, yeah, it seems to be a really interesting situation. And, have we seen, let's say, a rollover in the peak of demand for that gold at this point? Obviously, I'm not asking you to speculate on what the future of the demand is going to be, but as we're able to look at how much was delivered, let's say, over the past 3 weeks versus what we're getting now, has there, or was our peak behind us versus what it is today?
That I don't know, because I don't watch the Comex inventory numbers on a daily basis.
Okay.
I saw it was still going up. If my Twitter time feed is correct, I still call it Twitter. It's so strange, eh?
I do too.
X is just with X, it's a hard sentence to get your mouth around, but it doesn't matter. What we do see is, for example, lease rates are coming down in the UK. So we know some of the friction there, because gold is a physical commodity, and sometimes when you want to get, let's say, 10% out of a very large gold fold, there is some friction at the door, which creates also a discount. We saw a discount for gold stored at the Bank of England. Now, that was quite unique. Although it might have happened before in 2020 during COVID, but all those frictions are easing. So it could mean that, the situation is calming down. But maybe they just found a quicker way. They hired more people. So the same amount of gold is flowing out. In this respect, we have to wait for monthly data on LBMA holdings, UK exports. There is now some confusion, I think, about US imports, because normally gold is imported under a HS code. All merchandise trade in the world is done via these HS codes. And analysts like me, they use HS code 7108 for gold. But for the last couple of months, the gold that came into the US was done under HS code 7112. So it's very strange that they use a different code. And also, the other thing is with what I just talked about is merchandise trade statistics. Now, you have two kind of records in the world. You have merchandise trade statistics, which is just a record of, in this case, gold moving across a physical border. That's it. Then you have the balance of payment statistics. And that is not about gold movement. That is, for example, if a US resident buys gold in London from a Chinese resident, then it's included in the balance of payment, but there is no physical movement. So I think they still have to, the authorities and the statisticians still have to sort out what exactly happened in the past few months. And maybe, I will write an article about it if I get some time and I can dig into the data myself.
Well, with the codes that you mentioned, what is the difference there? What is the point of changing the code? And does that make it show up differently in the trade deficit for the US and, let's say, not count as part of GDP?
Well, actually, all this, what I just said was about merchandise trade statistics. So the code is just to classify goods. Gold came in, silver came in, copper came in. There's a similar situation now, I think, with copper and the tariffs and premium, which is interesting. And that all has nothing to do with the balance of payment. That just goods. Maybe a Chinese person owns gold and wants to move it inside the US. So it might cross a border, but it has nothing to do with the trade deficit. So all these things have to be distinguished. I do know that when statisticians analyze the trade balance, they start off with the merchandise trade statistics. And then they have to correct them for what has actually been bought by residents from non-residents, and then you come to something which is called the trade balance, and that influences GDP together with the entire current account, which is the other side of the capital account.
So Jan, this kind of leads us, I think, nicely into this idea of getting an audit of Fort Knox, right? We don't really understand, as you rightfully pointed out, we don't really understand why there's so much gold moving in. Let's say the complete picture of why there's so much gold moving in. There's lots of speculation around why there's so much gold moving back to the US. But you have written over the past couple of years, I think 9 articles about auditing the US gold holdings, right? So why should Trump and his team not believe the Treasury that the gold held in the US gold depositories, including Fort Knox, when they say it has been audited annually? What are the intricacies to understand that?
Well, the thing is that the audits as of 2008, and I'm just talking, so the US gold is stored at the Federal Reserve Bank of New York and at the US Mint. And the Mint has 3 depositories, which are Fort Knox, West Point, and Denver. So let's just talk about the Mint gold, which is like 95% of the gold. In 2008, all that gold was audited. So they started in 1974. There was a huge, let's say, press theater event. They opened a compartment and all the gold was there, and all kinds of people that know nothing about gold were looking at gold and they thought, wow, that's yellow, cool. So that's not an audit. But what they did in 74 is start what was then dubbed as the continuing audit program. The program for continuing audits. And the plan was in 1974 to audit 10% of all the US gold reserves every year. And then so they would be finished by 1983. And after that, how they did it was you open a compartment, you take out all the gold, you count all the bars, you weigh a few bars, you assay a few bars, you put all the gold in a new compartment. If everything is okay, you put a seal on the compartment, and then you never have to break that seal again. Mm-hmm. Okay, so that was the plan. But that's not what happened. So in 1993, when the audits were supposed to be done, they weren't done. And what they started doing was reopening compartments that were already done. So a lot of gold at West Point and the Federal Reserve wasn't even audited at all, but like half of West Point wasn't audited yet. And they didn't finish West Point, but they started reopening compartments at Fort Knox, according to a plan approved by the treasurer, it says in audit reports. So nobody can explain that, if the compartments were audited, they were sealed, and the seals were meant so you never have to open them again, right?
And sorry, Jan, just to clarify, you said that this audit started in 74 and should have been done by 93?
Yeah, well, the 74 audit was actually done because there was a lot of pressure about is the gold there, et cetera, et cetera. So they did an audit then about 1 or 2 compartments, and then in 1975 they started. I simplified it, but in 1975 they actually started the program for continuing audits, and they said the audit from 1974 is credible, so we take that into our continuing audit program. And so that program actually started in 75, and it should have been done by, let's say, 1983, because they wanted to do 10% every year. So that was the plan, and then they started re-auditing, we can just say reopening vault compartments that weren't meant to be reopened in 1983. Now, that went on until 1992. Then the auditor, the OIG, stopped with the audits. Then the Mint took over. That's the custodian itself. Then from 1993, OIG stopped in 1986. From 1987 until 1993, the Mint did it, which is the custodian. So that is like a bank opening its own safety deposit boxes, from clients.
Mhm.
Where the auditor at that point is unknown. They've lied about which compartments they opened. Then in 1993, the auditor took over again. That's the OIG, the Office of the Inspector General of the Treasury. What they did was not, again, finish the audits, but reopen compartments that were already audited. That went on until 2008. And in 2008, they finally, I'm just simplifying things because it was still not, one compartment with coins was still not audited. But in 2008, it was finally all audited. So after 2008, only the seals of the compartments in Fort Knox, Denver, and West Point have been inspected every year. And then they say, well, the seals haven't been broken. It's all fine. It's all fine now. But if you know what happened to the seals, some compartments have been opened 2 times, 3 times, 4 times. And that was not meant. That was not meant to be the procedure of the audits. Compartments were meant to be opened once. So there's a lot of, and also, why did the auditor stop in 1986, and why did the Mint took over audits, and why did the Mint also reopen compartments that were already audited, and why did then the OIG take over again in 1983? There are so many questions, and this is just the tip of the iceberg. I'm not talking about all the procedures that failed and the scales that they used that were wrong and not calibrated, and assay tests that were screwed up, and they had to also open some compartments to put back gold from the assay test, and just clumsy people from the service. But also, this is a very important topic. So you better do it with true experts and not make a single mistake. Only then can we be assured that the gold is there. I mean, an audit is meant to reassure us, to remove any doubt that the gold is there. And all what the audits have done is increase insecurity about if the gold is there. And the other thing is that most people don't even know that the gold has been audited, or that there is any procedure every year. Why? Because they don't want to flaunt with the with all they did, because if analysts like me start digging into it, they find all these mistakes. Mm-hmm. So it was actually in 2011 that Ron Paul, everybody knows Ron Paul, he started the Gold Reserve Transparency Act, and he wanted to have the gold audited. And then he learned for the first time from the OIG that gold was already audited. So even Ron Paul didn't know by 2011. So it's, what was the secret with these audits? And also in 2011, it appeared that they never touched the gold at the Federal Reserve. So it's like 450 tons of gold there. And from 1974 or 1975, it was meant to be audited. And in 2011, they hadn't done it yet. So, so many, questions, why did it take decades? Why hasn't it been done carefully? And with such a conclusion, we can only say it has to be done again. It has to be done properly. We need an independent party standing next to staff from the Mint, or independent auditors going in themselves, instead of relying on government staff and paperwork. And only then we can be reassured that the gold is there. Now they might, if they go into the vaults again, might refine the gold while they're there, because as most people know, 90% or the majority of the gold in Fort Knox and also the other depositories those are coin bars. So those are mostly more or less 90% pure. And the current wholesale industry standard is, of course, LBMA Good Delivery, which says a gold bar has to be roughly 400 ounces and has to be pure 99.5% or more, right? So now, for example, a lot of this idea by Judy Shelton is gaining traction that we have to issue, or the U.S. will issue treasuries, which can be paid back in gold, but you can't do that with illiquid gold. With gold bars from, let's say, 100 years ago that you can't trade in wholesale markets these days. So if they're going to audit the gold again, they might as well refine the bars.
So Jan, I've heard a couple different ideas on how long a new audit could actually take. Do you have any idea, what a proper new audit of the US's gold how long that would take and what that would entail?
I don't know. I haven't done a calculation, but it would take a long time. Also because what many people don't know, Fort Knox is very small, right? So there's a very small hallway inside the vault room with compartments, and it's not like you can move in with 100 people and bring gold bars in and out, etc. You can only go in with a few people and do compartment per compartment, I think. So you can't do it in a few months. I think you really would need a couple of years. That's just my estimate at this moment. So yeah, also because you don't. These are thousands and thousands of bars. Sorry, I don't have the numbers in front of me, but if we're talking about 8,000 tons of gold. That's a lot of gold bars. So it would probably take a few years.
Mm-hmm. So is another big part of this, Jan, this process, understanding whether any encumbrances have been placed upon the gold via swaps, leases, pledges, or any other form of rehypothecation have taken place on that gold as well?
No, never. I've never read that in any audit reports that survived the 80s and other periods. No, that has never been done. So that would be very interesting to know if the US has lent out any gold or swapped out any gold. Regarding Fort Knox, I don't know if it's very relevant because, for example, if the US Treasury would lend out gold, and for example, to me, so I would borrow gold and they would say to me, well, you can borrow this gold. But one thing, you can't withdraw it physically. So it's just a financial transaction, right? Because obviously you can't withdraw from Fort Knox. It's a bit, or maybe you can, I don't know. But that's a question, actually. But I think they don't do that because, it would show on videos and on satellite images that the trucks would come and go in Fort Knox. So I don't think they move out the gold in Fort Knox. Maybe they did so in the past. But my point is that, I think a borrower of gold would never say, yeah, okay, fine. Oh, it's in Fort Knox. Oh, then what's the point of borrowing gold if you can't physically withdraw it? They might as well collateralize that loan, the U.S. Treasury, with sand from the Sahara if you can't get it out. So all the encumbrances are interesting to know about. Also, from a standpoint from how is the Treasury involved in the gold market and do they lend out gold from time to time? But I don't think that there are like 50 claims on the gold in Fort Knox. That's not what I think. And that's always, of course, the story by a lot of, let's say, my colleagues, by different gold analysts, that there's so much more gold sold on paper than there is physically. But that's only like a story in terms of the gold price. If there's fraud, if they say, well, you have gold in the vault, but also a lot of other people own that bar, that's fraud. If it's not fraud, which is often the case, I think, for example, in the LBMA, if you read the LBMA brochure, it says, when you buy unallocated gold, you're an unsecured creditor. So there's no fraud there. Then it doesn't really matter to the price, I think. But so that's for the encumbrances.
Mm-hmm. So what do you think the entire point of all of this is? The Treasury currently holds the value of its gold at $42 an ounce. Why do you think that is?
Yeah, so they do that because when Bretton Woods broke down, they wanted to demonetize the gold. And there was in the beginning, when it began crumbling down, there was an agreement between central banks that they would only buy and sell gold among each other at the official price, which was first $35 and then became $42.2. And they were not allowed to, for example, buy from a central bank at that price and then sell in the free market at a higher price. And all this was done to demonetize gold, to remove it from the system. So, and eventually in the 80s and 90s, more and more countries started to mark their official gold reserves. So Europe now has a very big gold revaluation account. Sorry. And the US is still, valuing its gold at this silly number, $42.2 per ounce, which is basically them saying, well, it doesn't have a function in the system and it's pointless. And it all has to do with pushing the dollar as the world reserve currency and not, shining a light on gold and its true value versus the dollar. So, of course, if they would revalue the gold, you'd also say that, through the decades and through time, the gold price goes up, so the dollar loses a lot of value against gold, and all these truths they don't want to. They just want to keep them down to continuate the dollar hegemony.
Mm-hmm. So with an idea like this, as you brought up, this gold revaluation account, if the U.S. did this, does that bring a lot more attention, let's say in the West particularly, back towards gold and away from the dollar?
Well, first of all, it's an acknowledgement of the gold price going up and fiat declining in value relative to gold over time. Mm-hmm. I think that's the main point. Then
just that outright acknowledgement.
Yeah, that outright acknowledgement. Also, when you use a gold revaluation account, look, if you have an asset on your balance sheet, right, the price can go up and down. Now, for a central bank that can create money, it's a different accounting system. So if something, for example, if the Fed, just as an example, would hold euros on its balance sheet, the price goes up and down, but not that much. It goes up and down, not that much relative to the dollar. It's not that in 30 years' time, the euro has gone down by, 60-40%. That is the case with gold. Then if you use the gold revaluation account, that means turn the unrealized gains of gold into money. You also say the gold price is never going to go down, because if you use that gold revaluation account, you actually it's a little bit complicated. You actually increase the cost price of the gold, and so you have a new, let's say, cost price. Then if it would go down, the central bank would make a loss again, and it right. But if you use the gold revaluation account, you're also saying, well, gold can't go down, right?
That's the new floor.
So yeah, or they use the gold revaluation account and they make a promise that it won't go down, because they say, well, if the price goes to, for example, 2,600, we will go into the market and print money to buy gold and put a floor under the gold price. Mm-hmm. So all this is very bullish for gold and an acknowledgement that fiat currencies go down in time relative to gold. And so that's why there's so much controversy about this gold revaluation account, and also the official price of gold, which you just mentioned.
Right. How much new funding do you think could be unlocked by revaluing the US's gold reserves?
At the moment, if they would take the full revaluation account, and in the US it works a little bit different because the Fed doesn't own any gold, not 1 ounce of gold, so it all belongs to the Treasury. The Fed gave it to the Treasury in 1934 in return for gold certificates, which were first valued at $34, and then eventually, when the official gold price went up to 38 and 42, the certificates are now valued at $42. But let's keep that out of it. Let's just keep it simple. If the US would use its full revaluation account and revalue gold from $42 to the present market value, that would be about 700-800 billion that they would free up as new money, which they could spend. It would also be a form of stimulus, because they would directly inject that new money into the monetary system, so to say. So if they revalue a gold, the Treasury General account at the Fed would increase by the same amount. It straightly goes to the Treasury General account. Now, if they spend that money, bank reserves are of course increased, but also bank deposits. So they would directly inject 800 billion into the economy, which is very inflationary. Mm-hmm. So that's why they're pretty cautious to do that. Now, by the way, another option to use the gold revaluation account is not spend the money, but take a loss. So, for example, the Central Bank of the Netherlands has also said that, they're making losses now. A lot of central banks are making losses because they bought bonds at 0%. They said, well, we have a backstop in our balance sheet, which is the gold revaluation account. Mm-hmm. Now, of course, what you can also do, if you have a lot of bonds on your balance sheet on the asset side and the gold revaluation account is on the liability side, you can just say, well, we'll just cancel 500 billion in government bonds and take that from the gold revaluation account. So that would not create any new money, but it would be debt relief for the government. So these are all tricks, monetary tricks, which can be done to help, let's say, governments and lower the debt. And we'll see. It's funny now because I started writing about this in 21 or 22, mm-hmm. and it's funny now that everybody's talking about it, and it's just it comes from the fact that fiat money over time depreciates against gold, and then you have this. You get these options.
Mm-hmm. Could they also inject that or use that let's say 700 or 800 billion to start the sovereign wealth fund that has been kind of talked about as well?
Yeah, sure, they can. But if they use, if they use it all, they would need to put a floor on the gold price. Mm-hmm. And I think, it's just so I thought the sovereign wealth fund was a different word for the strategic Bitcoin reserve, but we now know that the strategic Bitcoin reserve is just hodling the 200,000 Bitcoins they already stole from people. And it's like a promise, we won't sell them. Mm-hmm. So that's not very bullish. And in addition, they also talked about other cryptocurrencies which they are going to hold. I'm not sure if they need to buy them or they already stole them from people as well, mm-hmm. and promised to hold them. So we'll see. It's a bit of a schizophrenic administration, to be honest. I'm not entirely negative of Trump. He also has some good ideas, but he's I can't really get a handle on him.
Yeah, I mean, there's so much chaos, so many things happening. The news flow is never ending. We need some stability that I think gold ends up providing. But we'll see.
Good point.
What this ends up kind of producing down the road, right?
Yeah, and it's exactly what you say. All this uncertainty about what's Trump going to do this day or the next day, and also other countries like Europe now. They're very rapidly setting up this new defense budget. I don't know if it's all becoming reality, but I'm quite sure they kind of know that NATO is coming to an end, or they can't rely on America anymore for everything. So everybody is just, making sure it's safe. So Europe is doing its thing. They have a lot of gold already. They're setting up defense now to be able to protect themselves. The People's Bank of China, which is actually the biggest story in the gold world, but nobody's talking about it right now, is buying gold hand over fist. I've also written about this. The amounts that they publish, as officially reported to the IMF, that they buy 5 tons a month. That's not true. They buy not every month, but they buy 50, 60, sometimes 70 tons a month, and they buy it in London, but also in other places. And since the war in Ukraine and the freezing of Russia's dollars, the People's Bank of China saw it coming, of course. They thought, oh my God, this is just the evidence that credit and US government bonds are credit as well, because you have a counterparty. Credit is not to be trusted in the end. I mean, you can get dividends from them and you can get a lot of growth but also bubbles. And, that's what let's say the financial world has been doing since World War II, just expanding, more credit, more leverage, you name it. And the People's Bank of China is like, well, we really want to rotate into gold because it's neutral, it doesn't have any counterparty risk, and that also moves the price up, and it also means that the entire global financial system is deleveraging. So I don't know if you want to go into this, but maybe I can share a little bit. So in my theory, right, you have in an economy, you have, let's say, two groups. You have financial assets and goods and services. Goods and services is what it's all about. That's the end goal of every participant in the economy. The financial instruments, the financial assets, are a means to an end. So that means money, stocks, bonds, derivatives, etc. It's a way to make a way to facilitate trade, invest in companies, etc. But it's not the end goal of participants in the economy. Now, in those financial assets, I see that as Exter's inverse pyramid. So at the bottom, you have gold, which is neutral and has no counterparty risk. And everything on top of that is credit, because it's not neutral and you have counterparty risk. So let's say since the 1950s, a lot of new credit has been expanded in different cycles relative to gold. So if you just measure the shape of the pyramid, or if you measure the ratio between the value of gold there is and how much M2 there is, or the market cap of stocks and all the debt in the world, you can get a sense of where we are in the debt cycle. So I use not GDP, but I use gold for that. And this research shows that we are at the end of a debt cycle, that there is a ton of leverage in the system. And to deleverage, the gold price needs to rise, because then the base of the pyramid, the neutral base, which is not credit, goes up relative to all the credit resting on top of it.
So, Jan, when we think about that deleveraging, how does that affect the value of those dollars? Doesn't the value of those dollars have to go, or basically have to go down quite a bit as done by inflation as part of that revaluation?
Yeah, well, that's a bit complicated, I have to say, because we never know how it will unfold. But usually there is let's say you have 4 prices of money, right? This is from what's his, Zoltan Pozsar, and also his mentor. You have the FX rate, you have interest rate. What else? You have, of course, inflation, and you have par. Now, it can be done through several. The cheapening of money can be done through one of those prices of money. But very often, currency is cheapened by inflation. So that's, consumer prices going up. And it, makes sense, because then the dollars are devalued. So debt to GDP also goes down. The debt burden goes down. And the gold price also goes up. So that's like Ray Dalio says, that's the most used way in history to deleverage the system.
Because Trump wants a weaker dollar to facilitate trade and to bring down these trade imbalances, does revaluing gold on the balance sheet, does that end up creating a weaker dollar as one of the effects of revaluation?
Well, it certainly fits into the bigger picture of deleveraging, right? Mm-hmm. And it's all just, I mean, these trade imbalances are also part of too much leverage, because what foreign central banks did is they absorbed all the debt that came out of the US, and that became reserves for them. So, you know, instead of gold, so that created more reserves than gold could create. And so all this I see as a what's happening now fits into this theory of mine of deleveraging the system. So his cheapening of the dollar to create more jobs in the Midland, boost the industrial base in the US, but also revaluing the gold and maybe use that as a for a sovereign wealth fund or for whatever he wants to use it. It's all the same. It's all bringing back the imbalances and bringing down the abundance of credit, in my view. Yeah. So it's all bullish for gold, I think. Yeah.
Well, Jan, part of what I wanted to talk to you about today as well is, let's say, contrasting this attitude of gold, as we've gone over, of the West, or let's say specifically the US, where we're putting the dollar out front and showing that is the store of value, versus the value of gold, right? Having that contrast of gold versus dollars. How is that view different in the East, specifically in China? You know, how do they see gold within their financial system differently than the US does?
Oh, I'm not sure if I understand your question correctly, but in China, there's a whole, the dollar is a very special currency in this world because it's the world reserve currency. It's always, in that sense, gold and the dollar are competitors. Mm-hmm. And in most other countries, the national currency isn't even a competitor to gold. The dollar is a competitor always to gold, and their own national currency. We kind of know that, look at India or some of these other countries. All those people, they know that, saving in rupees, for example, that's not, gonna increase their wealth or keep their wealth. So I think it's different from a U.S. perspective and a Chinese perspective, for example. So the Chinese just want to get rid of the dollar, as I'm not saying they're going to dump it tomorrow, but mm-hmm. they're really thinking about bringing down their dollar reserves and be less dependent on the dollar. Also because they can be sanctioned through the dollar, because the dollar is also a payment system, and that's why they set up Enbridge now and setting up all these, let's say, digital rails to connect to other countries and settle in wholesale central bank digital currencies. And they also are starting to tokenize bank deposits. So it can all be put on blockchains. It can be connected. And that's all, outside of the dollar system. Mm-hmm. And final settlement can be in gold again. I saw a article in the Russian press today. I have no idea if it's true, of course, but they're starting to do a test with tokenized gold for international settlement. And the gold is then stored in free ports around the world. Now, that can very well be the Shanghai free trade zone. So then, for example, Russia and some of these BRICS countries or members of Enbridge can trade in renminbi. And if they have a surplus at the end of the month, they just convert those yuan, which is the same as renminbi, but different grammar, yuan into gold at the Shanghai International Gold Exchange in the Shanghai Free Trade Zone. It comes with a bit of trust, so they would also need free trade zones in India and Saudi Arabia and Russia and etc. So the gold is not only in China, but these are exciting developments and. And that at the point that we are at the end of a debt cycle. So again, I'm really thinking that there's a a bright future for gold.
Mm-hmm. Why do you think there is such a discrepancy, let's say, between China's official gold holdings and what some speculate as what they actually hold? Yeah.
Well, China, the People's Bank of China is in a tough spot because on one hand, they want to fight the US and the dollar. And on the other hand, they don't want to show too much of their cards because if the whole world knew and it would be too obvious, then everybody would run to gold. The gold price would skyrocket within, let's say, a week. And China would be able to buy less gold with their dollars. So on one hand, they lie about their gold reserves and say we buy 5 tons a month or something, which is a signal, but it's like nothing for them. And on the other hand, they are leaving some breadcrumbs, and it's kind of obvious now, or obvious. I'm quite sure they buy a lot more gold. But on the other hand, they also want to shine through that they are buying some more. And you can just look at their import numbers. And that used to be only for the private sector, but now that's also the monetary gold the PBOC is buying is also included in those import numbers. And just showing that they are very aggressive gold buyers, and instead of hoarding dollars. Mm-hmm. So that's their dual mandate, so to say, or agenda, that they don't want the gold price rise too fast, and on the other hand, they want to buy a lot of gold and also show that a little bit to the world to push back on the US.
Mm-hmm. Do you think that much of that attitude extends to the East in general, whether that's Russia, Saudi Arabia, these countries that maybe want to get away from being under the foot of the dollar?
Yeah, well, certainly for Saudi Arabia, I found evidence that Saudi Arabia is also buying a lot more gold than it says. It says it buys nothing, and it buys a lot of gold in Switzerland, maybe predominantly. So there are a lot of countries, and of course this is done secretively because Saudi Arabia also has long-standing ties with the US. So it's all complicated, right? It's all geopolitics. For Russia, it doesn't matter. But what Russia does now is they don't add gold to their central bank reserves, but they have this sovereign wealth fund where they hoard a lot of gold and also yuan. Saudi Arabia is an example, but India as well. They are a member of the BRICS, but they also have a lot of ties still with the West. And, the world is interconnected now more than ever. And it's not so easy to just say, okay, goodbye to the West and do it themselves. Mm-hmm. Also because the US is sometimes labeled as the consumer of last resort, right? And a lot of these countries like China are export countries. And if you can't export to the US anymore, that is a severe blow to your own economy. Mm-hmm. So that's why they take things gradually. And, and sometimes we can see some parts or some remarks they make in terms of how they view the dollar, or maybe want to trade and also trade oil in yuan, and want to hoard gold and want to be less reliant on the dollar. That's coming out. They do it slowly, but it's coming out more and more. Now we also have, of course, these stories about the dollars collapsing. Those have been going around for decades. So it's also really difficult to get out of the dollar. But now there's a political will. I think it will happen, but still not very fast. If you look at, for example, one of my favorite charts or data sets is global international reserves, and then you can look, how much of all those reserves are in dollars, gold, euros, yuan. The dollar is going down slowly, but the gold mainly is going up. It's not really that the euro or any other currencies are taking. No currency can take the place of the dollar, of course, because no currency can can run a trade deficit that large or budget, and they don't wanna, right? Because you get Triffin's dilemma, and in the end, you get an exorbitant privilege, but in the end, it can also work counterproductive. So they rather choose for gold.
As we wrap up here, Jan, are there any ideas that let's say something that you're paying attention to, that you're going to be writing about next, that you think needs more attention?
Well, yeah, I will continue writing on how much the PBOC, the Chinese central bank, is buying in terms of gold. Also, what I just talked about, how much gold as a percentage of global international reserves is doing. So I have my own numbers for how much central banks, how much gold central banks have, because there's been so much secretive buying, and it's doesn't take a rocket scientist to figure this out. If you go to the World Gold Council website and take every quarter they release the gold demand trends report, and there is a just one number saying how much gold central banks bought that quarter. Now that's an estimate by the World Gold Council based on field research. Now, if you compare that to the numbers the IMF reports, which is just what countries report who have bought, there's a huge difference, and that difference is just reflects secretive buying. So I will be tracking that, and then how much gold is gaining in terms of percentage in global international reserves, and I will be on the other hand, because a currency is a store of value but also a medium of exchange. I also will be tracking Enbridge and developments in alternatives to the dollar payment system.
Excellent. Of course, all of your research and all of your very thorough articles are all available at moneymetals.com. You're a research analyst for them. And of course, excellent Twitter follow as well, or X at @JanGold_, JANGOLD_. Jan, thanks so much for your time today. Really appreciate it.
Thanks for your invite, Tom. It was a pleasure doing an interview.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.